Hey guys, in this video I wanted to talk about the 12 things not to do when obtaining a mortgage loan. You started the pre-approval process, and from the time we get all the way to closing, make sure you watch this list with me, and make sure you avoid these potential delays, and some of these can actually kill the deal. So let's jump right into it. I put together a list over here, and the first one obviously is don't change your jobs, right? This is something that it's kind of important. We need you to work on the day of closing. So if you're thinking about making a career change or taking another job, just wait until after closing. Or if you're in the stage in the pre-approval process and you have a couple weeks, couple months before we actually find a house and go on the contract, then communicate with your loan officer, whether you're working with me or another loan officer. Make sure you communicate with them, because we need to schedule the closing accordingly, right? It doesn't automatically kill the deal. If you're getting employment with another company, same field, you might get a pay. We basically have to time it where you close after you start the new job. Okay, so sometimes it requires, in most cases it's 30 days of pay stub. Sometimes it's one pay stub, and sometimes you can go with the offer letter. It depends on the situation and loan you're doing as well. The second thing is don't change your pay structure. So if you are employed right now as a W-2 and you want to change your pay structure where you get commissions and bonuses and anything like that, that's a potential delay in closing. Or if you go from being a W-2 employee to being completely self-employed or 100% commission or contract, then that can potentially kill the deal too. Okay, the third one is not to apply for new credit. Okay, we get excited, I know. Just make sure that until you get the keys to the house, you don't go and get new credit. Okay, don't buy furniture, don't buy a new car. Anything like that can potentially kill the deal. In some cases, not always, but in some cases you have the room ratio-wise to still qualify with it, but we do have to document it and count it in the ratios. If you're extending the price range and going higher on the sales price, this can potentially kill the deal. If you had a couple $100 payment for your car, or a couple $100 on some kind of furniture or anything like that. So make sure you do not apply for any new credit. It is checked before closing if any new credit was obtained in the loan process. Okay, so be careful of that. The fourth thing we need to think about is if you're getting married, it can affect your potential ratios and the loan that you have right now. So if you have an FHA loan right now and you were single during the pre-approval process, and maybe it took you a couple months before you found the house, but you got married in the process, we need to add the spouse and her debts, hers or his debts in the ratios as well. And we want to make sure that the name matches as well. If there's a name change, again, we need to document that. It can potentially delay the process as well. Number 5, do not deposit any sums into your bank that cannot be documented correctly. Okay, so any cash deposits, if you have a $10,000, $20,000 cash deposit, we need to be able to source it, to document it. So make sure if you're selling any items that you have a bill of sale and that we can prove where the funds are coming from. Okay, item number 6 is make sure you don't have any disputes on your credit. Okay, a dispute basically means that you don't agree with what they're reporting to the credit bureaus, and that has an effect on your credit scores and ultimately your interest rate and what you qualify for. If you're working on your credit, it's part of the process. Disputes are basically part of the process of getting certain items removed, but make sure that when you're on the contract, that all disputes, or even before during the pre-approval process, all of the disputes were removed, and when we pull the credit report, it's accurate to show an accurate credit score without those disputes. Okay, do not charge up your credit cards, meaning if you're in the process, you need to sit tight, don't get any new debt, don't go out to a furniture store and get try to finance any furniture for your new house. I know it's exciting times, but we need to sit tight all the way until closing. Okay, that can potentially delay or even kill the deal if it's a bigger amount and we're tight on the ratios. Okay, so keep that in mind. Next item is make sure your driver's license doesn't expire. You have to, at the closing, they require that you have a valid driver's license. Number 9 is don't skip payments on your current bills. You have to be current. Sometimes I know it might come across that, hey, I'm going to wait with this bill to save up more money make sure I have enough funds in the account for the closing costs, and that's not the right way. Make sure you have regular activities and make your payments and make the payments on time. Number 10 is do not spend money from the checking account unless absolutely necessary. basically we want to make sure that, when you give us bank statements usually come out once a month, and from the last bank statement you provided us, maybe you took out some money, right? So we want to make sure you try to minimize that, keep as much in the checking account all the way to closing, because we'll probably need updated statements or a transaction history, just an updated statement from you showing how much you have before closing. Number 11 is don't apply for any other loans, right? We want to make sure that you're not applying for other loans during the process of getting financing. We do check basically before closing. It's called the MERS, and it's going to come up if there's any other inquiries. If you're applying with another mortgage company for another property, just make sure we don't do that, okay? And then number 12 is don't put any gifts into the account. Gifts can be used with the home purchase, but they have to be done in the right way. And what I mean by that is you can get a gift from a family member for the down payment and closing costs, but we have to be able to track it and source it, right? So a lot of times we'll need a bank statement from the parents, for example. We'll need to get the transaction, a wire from their account to your account, and then we need to show another statement, updated statement from you showing that the funds are there and available. And then they will also have to write a gift letter. So make sure you don't go and pull out cash and then deposit cash in your account, because then we can't source it, we can't document it, we can't tie it that it was done, and it's the source where it's coming from. Okay, so make sure you take a moment. If I went through this too quickly, go back, check it out. Try not to do these things because they can potentially delay the loan, cause unnecessary headaches at the end, and it's going to come up right at the end. So make sure we don't do these. And if you have any questions, if there's any situation, just run it by your loan officer. Again, if you're working with me or someone else, make sure you communicate, because depending on the timing, it could be an issue or it could not, right? If it's during the pre-approval stage and something comes up, but it takes a couple weeks or months before you get a contract, we can work this out, and we just need to plan it accordingly so everyone is on the same page. Okay, so if you find this helpful, make sure you smash that like button, okay? Leave a comment in the comment sections. Let me know which one of these items are new for you that you didn't think about them. And make sure you subscribe to the channel so you don't miss any other videos like this. And I'll see you in the next video. Hope you find this helpful. I'll see you soon. Bye.